Srishti, you did mention about the sweetness back in the sugar counters, and why is that?
Well, it is an ET now impact, definitely, because Samir got us the story on the sugar counters, because there were concerns regarding the reports which suggest that the government is looking to curb the ethanol production amid the low output this particular season. But we have got clarity on this from our sources. So let's go across to Samir Dikshit to find out more on this.
So this was quite buzzing that government might restrict the ethanol production to certain extent, or maybe government may impose some sort of strong measures so as to ensure the sugar availability for the domestic market. But now what we are getting to know from top government sources that there is no such plan that government is considering to bring down the ethanol production. There is no such plan. Government is going ahead with its committed plan of 20% ethanol blending by the year 2025, and for the same they are not going to deviate. Currently there is no plan to reduce the ethanol production. This is the broader line that government is considering. And in addition to this, what we are also getting to understand from the government is that as of now there is a stock availability of somewhere around 80 to 85 LMT, the sugar availability. So this 80 to 85 LMT of sugar availability is enough to meet the demand or domestic consumption for next 3 months. So government is constantly saying that they are in a comfortable position when it comes to domestic meeting the domestic demand or the consumption. Moreover, government has put in place certain restrictions. For example, the export quota has for the year sugar year 2023, the export quota was restricted to 61 LMT. Similarly, government is looking to restrict the export quota, ensure domestic availability, and going ahead with the ethanol blending target. So this is what we are getting to know from government sources, that there is no such plan of reducing the ethanol production. Moreover, the sugar availability for domestic market is enough. Government is in a comfortable position, and government will go ahead with the pre-set target of 20% ethanol blending by year 2025.
All right, thank you so much for that, Sami, for that huge clarification, because of which you've seen a sharp recovery coming on the sugar counters, be Dhampur sugar, which is now seeing a recovery of approximately 6% from the day's lowest point. You also have Balrampur Chini that's seen a recovery of approximately 7% or so. Sri Renuka, Triveni Engineering, all of them marked recovery coming in for these counters from the day's lowest point, given the fact that our sources have told ET now is the fact that there is no active plan that is under consideration when it comes to curbing ethanol production, and they are committed to meet the 20% ethanol blending target by 2025. Thank you so much for that, actually, Samir. But it's not only sugar in the commodity space that is seeing sharp movement. In fact, it's the crude oil prices also that are seeing sharp movement, and Brent crude has in fact fallen below the $75 per barrel mark. You also had NYMEX crude that fell below $70 per barrel mark. Remember, Brent crude during the month of September was as high as about $97 per barrel mark. But why is crude falling? What are the implications on the companies back home here? My colleague Somit, who is an expert when it comes to oil and gas, is here to tell us exactly why such a movement coming in the crude.
Well, a couple of reasons for the fresh drop in the Brent crude prices. Firstly is the demand concerns coming out from China, and second is the fact that investors are now doubtful on OPEC plus a successful implementation of this production cuts. Now, because of these two factors, they're expecting the oil market to be in surplus, and hence we are seeing this fresh drop when it comes to Brent crude prices. Now, when it comes to the Indian economy, India imports nearly 85% of the crude requirements, so definitely this will benefit the Indian economy. And as per analysts, every $10 per barrel drop in average crude oil prices deflates the current account deficit by around 14 to 15 billion US dollars, which is nearly 0.4% of the GDP, and it also decreases the retail inflation by around 50 to 60 basis points, and wholesale inflation comes down by around 125 to 135 basis points. But when it comes to companies, a host of sector stand to benefit because of lower crude oil prices. Firstly, when it comes to oil refiners, they are one of the major beneficiaries because lower crude oil prices boost the gross marketing margin that the oil marketing companies earn by selling every liter of petrol and diesel. Now, earlier it stood at around 10 rupees on petrol and 3 rupees on diesel. Now, this would further boost for the oil marketing companies if crude prices continue to remain lower at around $75 per barrel barrel. Now this will however benefit the oil marketing companies only. Now when it comes to pure play refiners or the standalone refiners like MRPL and Chennai Petro, or for that matter Reliance Industries also, they would stand to lose because of this sudden drop in crude oil prices, because there would be a significant inventory losses for the pure play or refiners. Now when it comes to oil explorers like ONGC, Oil India, Vedanta and HOEC, now it will be negative for them because crude is the main product, and with low crude oil prices the realizations come down, which have a direct implication on margins and earnings. Now generally a $5 per barrel drop in Brent crude prices would impact the EPS of ONGC and Oil India by around 7 to 12%. When it comes to paint companies, it's beneficial because nearly 40% of the raw material cost is either directly or indirectly related to crude derivatives. Aviation companies also stand to benefit because nearly 40% of the total cost is fuel cost, and when crude oil prices come down, the fuel cost also reduces. Apart from that, there is lubricant manufacturers, tire manufacturers, cement companies and a host of specialty companies that tend to benefit because a major part of the raw material cost is either directly or indirectly related to crude oil prices, and whenever crude oil prices come down, the raw material prices also go down, which directly benefits their margins going forward.
Well, thank you so much, Somit, for getting us all those details. So, crack in the crude oil prices, definitely a lot of companies and sectors seem to be benefiting from that. But with this, let's move forward and get the expert take that given the scenario, which stocks and sectors you be focusing on. And with this, let me welcome on board Avinash Gorakshakar, Head Research at Profit Mart Securities, as well as Kunal Bothra on the technical side. A very good morning to both of you. And Avinash, coming to you firstly on your take on the crude oil prices, a sharp drop, but which sectors and stocks that one should be focusing at this point in time?
Yeah, good morning, Shrishti. I think crude oil prices largely would benefit, the oil marketing companies. As everyone is aware, their GRMs are closely connected to the crude oil price. So oil marketing companies, and secondly, companies which are into the lubricant space, companies like Gulf Oil, typically Castrol. I think these are also big beneficiaries because base oil is a derived input from crude oil. So once crude oil prices come down, even base oil prices come down. So these companies should also benefit. And apart from that, as Somit mentioned, paint companies, carbon black companies, typically, specialty chemical companies which consume crude. All these companies are definitely going to benefit. I think the paint companies could benefit significantly because for them, crude accounts for almost 65 to 70% of their total cost. So definitely, I think this is a good move. If prices continue to remain where they are, we could expect a bumper Q3 and Q4 from such companies, and that would obviously lead to a further re-rating in their stock prices.
Avinash, you want to share anything about the sugar counters in particular? Because yes, no doubt that you had the sugar counters also move on back of what is happening globally, and today you had a domestic news flow as well, which we got sources from government sources say that for now no plan or no active plan under consideration when it comes to curbing the ethanol production. You have a view anything on these companies, sugar companies, or the ones that are linked to ethanol production?
Yeah, I think, basically a couple of days back, some news report had come in that government would restrict ethanol from companies which don't manufacture ethanol either from maize or from wheat. And I think to that extent, there was a sell-off in some of the large sugar counters because government was restricting its supplies, from ethanol made from molasses. So I think now with this clarity coming in and with the government giving a commitment that 20% blending of ethanol by 2025 is very much on, I think removes a lot of fear in the markets because clearly ethanol has been one of the very large profit drivers for most of the sugar companies, especially the integrated sugar players. So I think players like Dhampur or for that reason Balrampur Chini, BCL Industries, Associated Alcohol, I think you could see a good amount of bounce. And considering the fact that crude oil prices have of course come down, but the blending ratio currently is just about 10%. So there's enough headroom for growth for these companies. And obviously, we should expect at least a 3 to 4% increase in ethanol prices every time a large order is announced. So I think net, it's a positive development. What happened in the morning was a correction. I think markets would obviously take note of this positive development and obviously, get normalized in the coming weeks.
That's the take on the sugar stocks. Definitely a great and a smart recovery from the day's lowest point. And recovery is what we are seeing in the markets as well, because as we speak, Bank Nifty has now managed to climb back in the green, holding at levels of 46,860, as well as Nifty 50 is also getting prepped up to get back in the green territory, just down about 13 points. But Kunal, coming to you for your take on the crude prices as well as the sectors that are in focus, because a lot of these sectors from tire companies to paint companies are now showing good gains. So any stock that's on your radar?
Well, I think, first on the crude oil prices, I would believe that this is a strong trend in the making, that we've seen the Brent crude prices falling from 90.95, I think, sometime back towards 75 and below where it's trading right now. So that's a clear indication of trend in the making. And that's why you've actually seen many of the crude sensitives, showing signs of not just a breakout for themselves, but a sustenance of a trend for many of these names. The OMCs, stand to be the first and more prominent stocks in that category. They've done exceptionally well and still look quite strong going forward. So I believe, a dip or a buy or a correction could be taken as an advantage to, buy into these names. Paint stocks, the likes of Asian Paint specifically, I think is something which has not participated in a very strong kind of a manner in this leg of rally. But I believe that stock could be something which looks attractive. From the tire space, I believe Apollo Tyres and Seat are the two names which are looking quite strong and fresh for a breakout. They've already confirmed a breakout for themselves. But again, these are the spaces which look attractive.
All right, so that's a view coming in from Kunal when it comes to the crude companies. But Kunal, anything on the sugar space in particular? Because we've seen globally a lot of commodities also move. Any particular sugar count that is actually showing up on your charts?
See, I think there are two names which are actually popping on the charts. One is Balrampur Chini, and the fact that the stock has come back towards its 200-day moving average. I think today's low for Balrampur Chini was around 400 mark, 398, 400, and the stock coincided exactly with the 200-day moving average. You look at the last 6-7 instances, the stock has had this tendency of breaking below those levels, staying for at those levels for a couple of days, and then starting a course of a strong uptrend. I believe that should be a good opportunity to try and buy into at current levels. EID Parry is also another name. The stock had been doing pretty well. Yesterday, in fact, the stock gave a breakout above 550 mark. Today, it's scaled slightly lower than those 550 levels, but again, looks attractive.
All right, so that's the view coming in on the sugar counters as well, Balrampur Chini as well as EID Parry.